Good morning, everybody. It is your daily crypto news for Juneteenth. Happy Juneteenth, y'all. My name is Matt, and do me a favor. If you're on Substack, Substack is at DCN Daily Crypto. So is our Twitter. But send me an email or a comment on either of those about what you think of our new show. We posted it yesterday. We're calling it Trends with Benefits. It won the vote. 8 of you guys emailed me and gave me your vote, either shitcoin talk, altcoin talk, or trends with benefits, and we got a 5-3 trends with benefits, so that's what we're going with. And we're just breaking down certain coins every week and telling you what our ideas are on buy, hold, sell, if it's crap, if it's great, if it's a good project, is it legit, is it a scam? We go through all of that in about 4 10-minute segments, so 4 coins a week. If you like it, please let me know so we can continue to do it. It's going to be in its own feed, and we're going to be doing that every Friday or Saturday, and it'll be coming out actually in its own feed starting next week. But we have news to talk about. Let's get into it. So yesterday, the Securities and Exchange Commission closed its Ethereum 2.0 investigation, according to Consensus. See, Consensus sued the SEC in April, and that was after the Ethereum Foundation said it was being investigated by an unnamed state authority. We all knew what was going on. And so Consensus did too and sued the SEC. And in their complaint, the company said that the SEC has been seeking to regulate ETH as a security, even though ETH bears none of the attributes to a security via the Howey test. And now the investigation has been called off. This means that the SEC will not bring charges alleging that the sales of ETH are securities transactions. Consensus said in a tweet, Ethereum survives the SEC. Today, we're happy to announce a major win for Ethereum developers, technology providers, and industry participants. The enforcement division of the SEC has notified us that it's closing its investigation into Ethereum 2.0. And to say it again, this means that the SEC will not bring charges alleging that the sales of ETH are security transactions. Paul Grewal from Coinbase, he also tweeted, he said, good. It was a silly theory of liability to begin with. But what about the ecosystem? What about the promotional statements? What about the efforts of others? How do you explain both this decision and the other projects maligned by the SEC's broken Howey analysis? And what he's referring to is the SEC in a lawsuit against crypto exchange Coinbase, saying that a handful of assets were unregistered securities. And we're talking about assets like Cardano, Solana, Matic, Filecoin, Atom, Sandbox, Decentraland, Algorand, so on and so forth. And because of this allegation, because of the SEC coming out and just making broad statements without analysis, without any kind of legal standing for the most part, some of these coins were delisted from other exchanges. Some of these projects struggled. And so what about the damage caused? That's what Paul's saying. The damage is done. However, we call this a win. Crypto hedge fund Pantera Capital is looking at AI. Cosmo Young, portfolio manager at Pantera Capital, said 10, 20 years from now, everyone will be using AI. I use AI every single day, multiple times a day, for multiple things. And he's saying this because it looks like Pantera Capital is going to be aping into AI. And they're raising a new $1 billion fund that is going to consist of Coinbase, Circle, and Bitstamp. With this new $1 billion, which it looks like they're going to have funded by 2025, it looks like they're going to invest around 20% of it into AI-adjacent crypto projects over the rest of the decade. So $200 million. AI tokens already has a market cap of around $26 billion. And Bitcoin miners are supplementing their income by providing processing power for Silicon Valley AI giants. So what does Pantera not look for in these companies that they are going to invest in? Of course, he didn't say how he was going to invest. However, he did say what he looks for or what he doesn't look for in companies. He tries to avoid opportunistic entrepreneurs. People who go to college saying that they want to be an entrepreneur with no idea of what they want to build, or they just do whatever is getting the most funding, basically trying to follow and chase the trends. And I think this is good investment advice for all of us. Look, if somebody's making a meme coin, a NFT, or just some kind of weird shit coin that is popping up because of a cultural reference or a trend, then really look into it and see what they're actually doing. Most people that are really entrepreneurs and they're building something that's going to have long-lasting value is way ahead of the curve, right? Just think of Satoshi Nakamoto and Bitcoin. This came out when this was on only a couple people's radar. People who've been looking at digital dollars for a long time, trying to figure it out, until Satoshi Nakamoto came out and did it. And it's still, 15 years later, still getting traction. So that's how you should be looking at things. So that's what he's looking at, is somebody who is way ahead of the game. There's a new DJT, Solana meme coin, obviously, for Donald J. Trump. And Bitcoin sleuths are wondering who the hell created this thing. And they found that this DJT Telegram channel appeared to share the same admin and tokens supported by Shkreli. And we're talking about Martin Shkreli, the pharmaceutical scammer, entrepreneur, opportunistic person. You know who I'm talking about. The guy who buys patents for drugs and then marks them up like 14,000% and things like that. Well, anyway, he denied any involvement with the DJT token, while the DJT token continued to rally. However, ZachXBT, he got to the bottom of it. And while he was digging, and he got to the bottom of all of this, a Twitter Spaces came up, and this farmer bro came clean-ish, in air quotes, came clean, claimed that he and Barron Trump, Donald Trump's youngest son, created the DJT token, after initially they denied it. So there's still really no confirmation. It's just word of mouth that Martin Shkreli and Barron Trump created a new DJT Solana meme coin that is pumping, but there is no official confirmation yet. So keep an eye out for this, and we'll see if ZachXBT gets to the bottom of it with confirmation. Chris, who is a listener of this channel for a long time and a friend of the podcast, gave me a couple DMs and wanted me to make sure everybody knew about this. He wants me to inform you about Fetch.ai to the ASI merge. And he's been in the game for quite some time, since 2017. And so anybody who's been in the game for at least 7 years or so, in my opinion, can smell something that's a little fishy and a little off. So Chris is hodling some Fetch on Coinbase. And he asked a question on X to say, hey, how are we going to do this migration? And he got instantly directed to the Fetch.ai Telegram, which is telling him to get his tokens into a wallet and go through the migration process. And so this gave him concern because there's no information from Coinbase about the merge dates and why there's a delay in the merge date. And also, he's like, why would I put my tokens into a wallet and hope for the best? The other thing is he noticed that Binance is supporting the merge, but he doesn't see that Coinbase is. The fact is that when there's a merge or some kind of token swap, usually centralized exchanges, if you have the token within the wallet, within the exchange, they will block any kind of outgoing or ingoing transfers for a while. Let's just call it 24 hours. They will do the merge on their back end and then unlock your tokens with the new tokens in place, or the merge tokens, or whatever other tokens that they are going to give you, if it's an airdrop or so on and so forth. Usually they can just take care of all of that on the back end and you don't have to worry about it. However, I have seen sometimes where you needed to send people tokens and they will send you tokens back. That happened with, what was it? I think it was Thorchain. Thorchain, they migrated to their own chain, so they burned their Binance tokens and gave you their own tokens on their chain, which was a weird process, and it was not nice and not fun and very, nerve-wracking, if you will. But it is super, super rare. So obviously, this is very confusing, even for somebody who's been in the game for a while. And so what does this person do? What does Chris do? He goes to the Telegram channel. But then he finds out that there's multiple Telegram channels. It looks like there's a fake Telegram channel with like 3 times more members than the official Telegram channel. So there's like 48,000 in the fake Telegram channel and 15,000 in the original. And so it throws him off because you would think that the OG Telegram channel, where you can get all the information, would have all the people in it. But it doesn't. Long story short is he had to go to Fetch.ai to their official Discord to find out the official Telegram group. And, well, he just wanted to let everybody know how confusing this is and that it's pretty dangerous. And everybody could get swindled by this scam that's happening, basically juxtaposed with this merge. Fact is please be safe. Usually centralized exchanges can do this for you, but it seems like there's some funny business going on. He wanted to make sure that everybody on Daily Crypto News knew about it. That's Fetch.ai. If you have that, you're waiting on for this delayed merge, make sure you're keeping safe and going through the official channels only. And finally, what's going on with Bitcoin hodlers? It looks like long-term whales are selling quite a bit in the past couple of weeks. Looks like $1.2 billion were sold, likely through brokers. The ETF had a net outflow of around $460 million in the same period. And this is around a $1.6 to $1.7 billion outflow from Bitcoin. Could it have market impacts? Again, $1.6 billion in a $1.3 trillion market cap. I don't think it makes much difference, but it does tell you that there is some sales and profit taking. I wonder what some people see on the horizon. But for us, let's see what those crypto prices are right now.
Here comes the money.
Here we go. Money talk.
And the time is 10:04 a.m. Eastern Daylight Saving Times. Fear of greed is 52 neutral. And that's because we are sideways. Even though we're down 6.3% in 7 days, we're up 0.4% in 24. That gives us a $65,000 Bitcoin. And like I've been saying for a while, middle of June is still going to be sideways movement. I predicted by the middle of June to the late end of June is when we're going to get that uptick. I thought we had it already a couple weeks ago when we popped back up into 70. But it looks like this is still the sideways. We're fighting the top and we're also fighting the bottom. We're in this channel. And so where are we going to break? We're going to break. And it's going to be up or either down. But when? I still think it's going to be in the next week or so. But we will see. Ethereum is up 4.4% in 24. It's at $3,534. Tether's number 3. Binance is at 596, up 3.2%. And Solana's number 5 at 137, up 2.2%, down 14 on the week, though. Is this a buy opportunity? I've been saying that for a while. You're catching knives. And if you have been buying the dip and it keeps dipping, welcome to crypto. When number goes up, you'll be happy as long as you don't panic, right? Strong hands, diamond hands. Running off the top 10, we have USDC, XRP, Dogecoin, Toncoin, and Cardano. The total market cap is sitting at $2.37 trillion, a Bitcoin dominance of 52.2, and an ETH dominance of 18.3. And that was our show today. My name is Matt. Please check us out on Substack. Please check us out on Twitter. Please send me an email, matt@dailycryptonews.net. Tell me how we're doing. Tell me how you're doing. And I'll see you tomorrow. Until then, happy hodling, everyone.